everybody. Megan Hamilton here with the Opulence Group under Home Sales Palm Beach in Jupiter, Florida. Hope you guys are having a fabulous day. I am here to tell you a little bit about lending. Whether you're a first-time home buyer, whether this is your 10th home, whether you're an investor and you're super savvy, awesome. The different products that we're going to be going over are conventional, FHA, and VA. Conventional is the most common that you will see with the home purchases. FHA is the Federal Housing Authority. That's a government-backed loan. So is the VA. That's a Veteran Affairs loan through the government. And on the first loan, which is the conventional loan. Now, people think that you need a huge down payment, like 20% or whatever, and that's definitely not the case. It's awesome if you do have that down payment. It's going to your offer look very nice, and you won't have to worry about private mortgage insurance, also known as PMI, which is attached to a conventional loan. I'll go over that in a second. But yes, so conventional loans require a credit score of around 640 minimum. The down payment, it depends. It's typically 3%, 3.5%. Depending on the lender, and if you're a first-time home buyer, there's a lot of products out there, depends on the lender, that if it's your first home, all you need is 3% for a down payment, which is phenomenal. But this also has qualifying factors involved. So check with your lenders, make sure you shop around, and get accurate information. But minimum down payment, we'll say 3% if you're a first-time home buyer, 3.5% if this is like your second time using a conventional loan. The debt-to-income ratio is around 43%, if not lower. So with borrowers with lower credit scores, they might be required to make a higher down payment, anywhere between like 3 to 5%. So that just varies. But yeah, so the next one is the FHA loan. FHA loans are government-backed loans. They are under the Federal Housing Authority or Association. Sorry, I always get that mixed up. Federal Housing Association. And they require a credit score of like 580. So there's a lot of other factors that are involved with government loans. They're very restrictive in their processes and what you are required to bring to the table to your cash to close. There's fees involved. There's mortgage insurance involved. It's called MPI. And that is roughly like almost 1% of the loan for the life of the loan until you refinance out of it into a conventional or pay it off. So with an FHA loan, you are required a minimum of 3.5% as your down payment. So that's about the normal for conventional, but it also includes a funding fee, which not a lot of people remember. This is a 1.75% of your loan value. And the next one is our VA loan, Veteran Affairs. This is an excellent product for our service members. Thank you for your service. If you qualify. So let's check it out. With VA loans, you require 0% down. I said that, $0, nothing. The only thing that you really have to worry about to bring to the closing table is your cash to close, which includes your closing cost, property taxes, insurance, premium, I'm trying to blank, deed recording, and your funding fee. This is the most important one. The funding fee always gets overlooked, or people don't even remember it really. And it's a good chunk of change for a lot of individuals. The first funding fee that you get charged when you buy your first home, you're going to be required to bring 2.6% of the loan to the closing table. Now, if it's your subsequent loan from the VA, say you PCS'd, you left Florida and went to Hawaii. Now you need to buy a house in Hawaii. Well, depending on your entitlements, obviously, the next loan is going to require a higher funding fee. Yeah, the next one's high. It's like 3.6%. The caveat to this is you can wrap it into the loan. So technically you can do the same thing I talked about with an FHA loan. You can wrap the funding fee and finance it with the rest, everything else, you know? So you could technically get into a house extremely cheap, if not practically for free. You know, I mean, there's other costs involved with attorneys, underwriting, that jazz. All right, we're gonna go through conventional FHA and VA super fast. So like I mentioned before, conventional loans require down payments of typically 3.5% to 5%. We are doing 3% because we are acting like we are a first-time home buyer. So 3% gives us $6,000. Yay, this does not include home insurance, taxes, your closing costs, fees, all of that jazz. That is separate. We're just doing this for, you know, easy to understand purposes. The mortgage payment you're looking at is around $1,500. Now this doesn't include your mortgage insurance, which is known as PMI when it comes to the conventional loan product, and mortgage insurance ranges from like 0.58 to 1.86 a year on top of your monthly mortgage payment. So I did not include that. Now, if you put 20% down, you don't have to worry about mortgage insurance with a conventional loan. Yay! Or you can wait until you pay it off so much, usually halfway on the amortization schedule, roughly 20% of the loan is paid off, then it goes away. So that's conventional in a nutshell. FHA, that's our government-backed loan. We did $200,000 with a 3.5% down payment. That's $7,000. Mind you, there's more cash to come to the table when it comes to FHA. You have to worry about your funding fee. You're going to have a higher mortgage interest because you're more risky, because you have a lower credit score, whatever it is, lower, higher debt to income ratio. But for our example here, we did a funding fee. It's 1.75% of the loan. The loan is $193,000 because that's $7,000 the down payment subtracted from the purchase price, and you get a little over $3,000, $3,377. There's also a premium, a mortgage insurance premium. It's your MIP, sad face. It's like $3,500 on this. So as you can see, a lot more money is involved. You can wrap the funding fee if you choose. You can wrap the funding fee in the VA loan too, if you choose. Totally up to you. It's like paying a fee on top of a fee, in my opinion, but that's your prerogative. $200,000 again for the VA loan. 0% down, $0. That's what I said, zero, zilch, none. So you don't have to worry about a down payment at all, which is fabulous. The only thing you have to worry about is a funding fee and then your other closing costs, obviously. But your funding fee, it can be, depending on if it's your first house, if it's your second house, your third, fourth, whatever, it's either 2.3% or it's 3.6%. 2.3 is the first home that you ever purchased under the VA product. And for a $200,000 house, you're looking at roughly $4,600. So the VA loan, it's a phenomenal loan. With all of my VA clients, I mean, depending on what market you're in, whether you're in a buyer's market or a seller's market, I do not recommend my clients asking for closing costs from the seller whenever they use a VA loan, because it's kind of like asking, will you pay me to move in your house? Like, no. Sellers have a ton of fees that they're paying, especially with commissions, with all of the brokerages and all of the agents that are involved. And that will be a totally different YouTube channel or YouTube episode. The next one I was going to go over is jumbo loans and construction loans. We're going to discuss this in detail on a separate episode because it can get very convoluted. Jumbo loans require a much bigger down payment. They aren't under the standards as the other loans are. They fall above the federal standards or the limits, federal funding limits. And they also are typically higher interest rates, but right now they're actually the same, if not lower, which is kind of crazy. They're like 5.6% right now. But it requires a home, depending on where you are in the country, over a certain price point. I think it's about $650,000 in most states of the United States. Hawaii, Alaska, I think are different. They're like in the 900s, if not like $1 million, but totally different beast. And then construction loans, we will do separate as well. I will go over USDA, VA construction, and your basic construction loans. That some lenders will give you that option, others won't. They won't support that product. That's why it's always good to ask and see what all your alternatives are. But anyways, that about wraps it up for today's quick lending experience, at least on the basics. Conventional FHA and VA. Thank you so much for listening. Please subscribe to my YouTube channel. I'm going to have a ton of content coming to you weekly in your email box and on my dashboard. I look forward to the next time. I hope you have a lovely day, and please don't hesitate to call me, email me, text me, day or night. I will be happy to help you with anything that you need, real estate related, or just to talk. Whether that's commercial, apartment syndications, resale, new construction, BRRRR strategies, investor strategies, short-term, long-term, Airbnb, I've done it all. So please don't hesitate. Love you all. God bless.